48 points, a fall of 0.3%. Now, one of the other factors contributing to those moves lower is oil, because it is slipping as OPEC members add supply and producers pump up their drilling. Now, the price continues to float around the $50 handle as uncertainty continues around whether or not OPEC will implement an agreement to reduce supply. All eyes now firmly fixed on the November 30 meeting in Vienna, where it's hoping that details of how supply will be reduced will all be finalised. Now, joining us for a little more is Tim Evans from Longleaf Trading Group, who's live from the CME in Chicago. Tim, great to see you there. Now, those energy stocks today are tracking the oil price lower. It seems to have been a fairly two-sided market, though, today, relatively on the defensive for most of the session.
Yeah, absolutely. First off, nice to be with you today, Leanne. Yeah, I mean, crude oil came in on the defensive here to start the week. I think we really started to see the dollar trade higher last night, which kind of began with the negative pressure on crude oil, and we were kind of in a risk-off. There was generally a risk-off sentiment in the market as we began the day, and that followed by some release of some U.S. numbers today that missed the mark, and that risk-off sentiment kind of persisted and carried over to the energy sector.
Yeah, absolutely. Well, let's just talk about some of those numbers actually missing the mark. And we're going to pull up a chart, actually, drilling boost, those US producers increasing the rig count to the highest level since February. I think those rigs rising for a seventh week, is that right? And that followed the first gain in those US stockpiles in 6 weeks or so, just adding to this oversupply glut.
Yeah, I mean, and I think it's an interesting story, because we're not focusing on, what is a response potentially of U.S. producers going to be, if in fact OPEC, moves forward with this agreement with a production cut. We've seen 100 new rigs come on since the expansion began back in June. So, I mean, in my view, I think that's really showing the responsiveness of the U.S. energy sector and what we can expect to see if, in fact, they do move forward the production cut. I think U.S. producers are going to step in aggressively and begin adding supplies to the market.
Now, we speak there about obviously the upcoming OPEC meeting. What is it, November 30 in Vienna? A lot of uncertainty about whether or not they're going to be able to implement this deal to reduce that supply. But, I mean, every day there seems to be this growing recognition that OPEC's going to have a pretty hard time, I think, getting their act together.
Yeah, I mean, I have the task virtually every day to come in and try to break the markets down and figure out what's going to happen at various meetings. In order to do that successfully, I mean, really what you have to understand is, what are the motives behind all the parties involved? And I think one thing that's not being focused on a lot, which should, is the fact that Saudi Arabia is moving forward with a major debt sale. It would be their first introduction to global capital markets here, potentially as early as next week. They're going to be trying to raise between $10 and $20 billion. A lot of analysts think that there's potential demand upward of $50 billion. But, that's a very large in scale and obviously very important to the future economics of the Kingdom of Saudi Arabia. When analysts were breaking that potential sale down, there was a lot of concern about the stability of crude oil prices. So in my view, what we could be looking at is a scenario where, Saudi Arabia wanted to pacify the concerns of the investment community so they could have a successful debt auction sale. Given the OPEC meeting isn't until November 30th, if in fact this goes off well, in my view, that dramatically reduces the need and the incentive for Saudi Arabia to move forward at that meeting.
So what does this mean for oil prices? The Kuwait acting oil minister coming out today saying expectations are for prices to be between $50 and $60 a barrel over the next 10 to 15 months or so. Until we get a little bit more clarity on that upcoming OPEC meeting, where do you think oil prices are going to trade?
Yeah, I mean, I think the market's as long as OPEC is able to continue to dominate the media and the coverage that, this potential deal is getting, that's going to provide a floor in the market. It's going to be very difficult for the market just to fall apart with that potential on the horizon. But again, given the supply and demand fundamentals, we talked to U.S. rigs earlier, One thing the EIA reported late last week is that there's 474 million barrels of crude in stockpiles. This time of year, that's the largest number we've seen since EIA began producing that data in 1982. So clearly the supply and demand fundamentals are not favorable. If this story allows a market to get $52, $53, I think that's a ceiling that it's not going to be able to get through.
Yeah, okay, all right. Now, how do you think this is all going to weigh on the broader market? Because we know that obviously oil stocks have been closely correlated with equities for quite some time. I mean, if we see the threat of US production increasing with those higher prices, those higher oil prices, is that likely to weigh on the broader market?
Yeah, I mean, we have a couple of interesting things going on at the same time. I mean, obviously, we just kicked off earnings season. That's going to play a big role in, how that broader market performs. But absolutely, I mean, the correlation between crude oil and global equity, or at least U.S. equity markets, has been very strong. This story is going to continue to weigh on the market. If we see maybe cutbacks in inventories this week on the Wednesday number, followed by some other, bullish developments with respect to OPEC, then I think the broader market should respond very positively to that. And conversely, if the news flow is negative, then, the broader market will probably suffer. I think the more important thing, though, is given the fact that earnings season is kicking off, we're, moving into the heart of it now, the news cycle hasn't been fresh with news stories about that production cut. So it changes the psychology of the market a little bit because it's not on the front burner every single day when you're, looking at market headlines.
All right, now just speaking of those earnings, because the banks obviously been in focus so far, and they've really beat market estimates there, although fairly hard to project their future quarters because revenues have been driven so heavily by trading activity. What have you made of, earnings so far and what we saw on the market today?
Yeah, I mean, we're kind of front-loaded with some of these bigger banks. And, yeah, I mean, we've seen consistently better than expected numbers. I mean, BOA came out very strong today, but, looking at in a little more detail, I mean, what you're seeing consistently amongst all the banks that have, beat estimates so far in this season has been trading profits, volatility, trading profits on that volatility. So, that's not the type of thing you can kind of project into future quarters and earnings on those quarters. So I think the market has discounted that pretty well so far, but we didn't see the market, get a big lift off on those numbers.
All right, fantastic. Tim, really appreciate your analysis on all of that. Thank you so much for joining us today.
Thank you, Leanne. Have a good day.
Tim Evans joining us there live from the CME in Chicago. Time for a break. Coming up live to the New York Stock Exchange as we head into the close. All eyes on Netflix and IBM's earnings hitting the wires. We'll have it all for you next.